Welcome back to Fast Market. I'm Alex Coffey alongside Kevin Hinks. It's now time for our hashtag segment. We're going to be focusing in on eBay ahead of its earnings release. Joining us from LikeFolio.com is the co-founder Landon Swan, and TD Ameritrade Network's very own Jenny Horn is joining us as well. Jenny, you know, eBay is one that maybe I've just forgotten about, but I look at the stock price performance, and apparently I'm the only one because this stock has been on a tear to start 2021. Almost a $70 stock, and that's $6 off its highs.
Alex, I can completely echo that sentiment because I don't think I've been on eBay since I was using dial-up internet, and I'm not joking. It's been about 15 years, and I think I was using, like, shopping for used rollerblades, and back then it sort of operated as this type of auction marketplace. Now it's sort of changed its business model. So I was doing some research this morning to see how really it competes with the behemoth that is Amazon, because I tend to think of the two as being sort of the same. Now, it's interesting because eBay doesn't really offer the same sort of subscription where you pay Prime, say $120 a year, but they do offer some free shipping on some of their items. So you consider, I was looking at a vacuum, the same one on Amazon and on eBay, and they were very similarly priced. Now, on eBay, the shipping was free. On Amazon, say you ordered 60 items over the course of the year, you're paying then roughly $2 per item for shipping. The one main difference, though, is Prime gets you that item either the same day, next day, 2 days at most, versus eBay, the same exact item would be delivered to me within 7 to 10 business days. So that was very interesting because right now we live in an environment where the consumer is the greediest they've ever been with last mile delivery. So I see that being a huge issue. But what I learned actually from sort of studying eBay and really where its niche market is it actually operates very well with luxury goods. They sell a variety of Air Jordans, luxury bags, luxury apparel, and also jewelry. So that's very interesting to me because that is something Amazon sort of lacks. So I think that that is their niche. That is how they compete with some of these behemoths, because I was just scratching my head to see how they could possibly have competed, but clearly they have. Over the last year, we've seen the stock run up so significantly, even into 2021. And another huge thing is they sort of serve as this middleman, meaning that they don't have to worry so much about supply chain and warehouse and other of these logistic terms that, you know, an Amazon does. And they also don't really have to worry about some of these raised prices amid inflation unless it sort of starts to affect their sales volume. But really, being the middleman, they cut out a lot of these different costs. Now, one tailwind going forward past this earnings report will be if they see strong buyer engagement continuing into the back half of this year. Now, a headwind, of course, would be these ongoing, concerns with COVID and also some of this economic growth concern. But I have to say that the time of the pandemic was obviously very strong for them, so that's possibly not even really a negative. But our first tweeter today talks about, operating in this sort of online marketplace, which obviously all these online marketplace stocks have seen a very, very strong last year. So our first tweeter says, a lot of e-commerce sellers have targeted Amazon/eBay/Shopify for online sales. The beauty of this is it has left the local marketplace on platforms such as Facebook, Craigslist, Mercati, etc. wide open. People don't want to wait for items. If they can get it quicker, they will. So that sort of goes into my sentiment about, we are living in a time where last mile delivery is so crucial. And actually, a lot of these local marketplaces can get you that item the same day, but you do have to go pick it up. That does sort of lack that sort of shipping and logistical, obstacle that a lot of these other companies face. But our next tweeter really talks about another competitor in this space, which I've been calling actually eBay, Etsy all morning. So I continue to confuse these names, but they are somewhat similar. Our next tweeter says, Etsy getting slammed on earnings may affect eBay and PayPal negatively, as expected. Typically, these platforms just take more margin away from sellers by raising fees. It will become more difficult to do that with Facebook continuing to build out their selling platforms. So I did think it was pretty interesting. A lot of comparisons to Facebook with eBay this morning, and Etsy was one I was typically thinking of. Now, Etsy reported earnings last week, and the stock did see some selling, but it's still up positive for the month. So although we did see a dip, they still sort of were able to shrug off of that. So Landon, ahead of this report, I'm very curious what you're seeing on eBay, because I had to do a lot of research to really even find out how this name is still relevant in today's e-commerce market.
Right. I agree. I haven't been on eBay in a while. And I think really you sell kind of junk or really high-end items. I mean, there's not a lot of middle ground on eBay. It's where you're kind of getting rid of things as low-priced items, used goods, things like that, which I think is probably getting taken over by Facebook Marketplace, as you talked about. or you're selling these really high-end collectibles, the shoes, watches, trading cards has been really big for eBay lately. I think that's kind of their niche market. That's where they're going for. But what's interesting is if you think about, you talked about how e-commerce in general was boosted by COVID, and now, our data is showing that it's starting to normalize. We're still, if you look at people just talking about spending money online, it's still higher than 2019. But it is in the decline, and it's going back to those 2019 levels. It was growing before then, so I'm sure we'll pick up back on that uptrend. That might be a sort of a support, if you will, on this mentions tracker. But I think e-commerce is returning to normal, pending the Delta variant and all the potential lockdowns that may come with. But I think that you've also got to think about who their competition is. It's, it is Facebook, of course, but it's also companies like Etsy. Even Amazon, of course, is going to compete. And I would even throw in a company like Shopify in the mix, because they're powering sites that are going to compete with eBay. You think about where you can sell your item, where you can buy different things. So you're creating marketplaces, or you're creating the ability to buy and sell. And if you look at how these companies have done compared to eBay, it's not great for eBay. So, we show this type of chart every once in a while. For those who are new, that bottom axis, x-axis, is purchase intent change. You want to be on the right side of that. That's growth. Left side is shrinkage or loss. And then the y-axis, up and down axis, is happiness. So you want to be up towards the top. So it may not be completely fair to include Shopify in this comparison. They're sort of skewing the axis, both of the axes in either direction. But even if you took them out, you can see where Etsy would be compared to eBay. eBay is the loser clearly among all of these companies. And it's just, they're struggling. I mean, their happiness is very low at 63%. Amazon's at 70, Etsy's at 80. If you include Shopify, you're up in the 85. So people are not as happy with eBay, often citing things like problems with fulfillment or shipping. As you talked about, it takes a long time to get your item. There's unexpected fees. And then, of course, there's low quality items. You just don't know what you're getting when you're buying from some random person on a website like eBay. So there's a lot of problems, I think, with this company. But if they do focus in on those niches of the collectibles, the sneakers, the watches, the trading cards, they're launching NFTs in May. So that's going to be really interesting to see how that goes. I think that is where they can make the most money, but it's just not high volume. So I think that's the concern moving forward for investors.
Landon, the positives and negatives with eBay are pretty well documented, right? They could have been so much more than they are because they were early to this and they seem to have screwed it up. But that being said, their sales were up 29% this year, and their organic sales are still looking up 8 to 10. And the one advantage, that they have over Amazon is that they don't have inventory. They're just a middleman. They're just passing goods from one to another and providing the e-commerce portal. But the question is, if they're in fourth place, well, their stock trades like they're in fourth place. So that's okay, as long as if their organic sales are going to go 8 to 10%, our job is to try to make money. And if this stock goes from, the low 60s to up near 70, it did its job for us today. And here's the thing. And, we're talking about the niche of eBay. And I think you brought up what might be the key area, and that is the ticket prices of some of these things, like designer gym shoes and used clothes and all the things that Amazon seems to shy away from. And it's either you get them there or you don't get them at all. So I think eBay is holding on. But the fact that, this company should have been, the history of eBay, it should have been so much more than it has turned out to be. But that doesn't mean this stock can't go from 67 to 70 or 72. And that's really all we're here for, Landon.
Yeah, I hear you. It's sort of a value play. If you look at, they got a PE ratio, I think 15 or 16, something like that. So there's not a ton of growth priced in. So I think investors have realistic expectations. This sort of dinosaur that was in first place super, super early in the space, one of the ones that made it out of the dot-com bubble. Like, this is like it's in the history books on the internet. And it could have been so much more, but it just didn't get there. And now it's sort of trying to find its way and trying to figure out where it can make the money. And it's sort of letting its users do that. So again, I think it's the really low priced items, which are going to be high volume, and it's the really high priced collectible, more rare items, which are going to be high ticket but low volume. And I think it's got to find its way in the outskirts, I guess, on the two edges. Whereas, the Amazons of the world, they're going to fill in all of the middle, which is a huge part of that curve. So I agree, it's got potential to be a good value at this, but you also have to think it's not a binary decision. Do I buy eBay or do I not buy eBay? It's, do I buy eBay or do I buy another company? And if you're looking for growth, I think that, based on the PE ratio, based on investor expectations, I think it's kind of assumed there's not a ton of growth here unless something really big changes in the next year or two. So for me, it's not an attractive company to invest in. If you had to say, Landon, do you want cash or eBay? I'd probably take eBay stock. But if I have the option to invest in something else, I'm putting my money elsewhere.
Yeah, so Landon, that's a really good point because, oftentimes we talk about some of these secular trends that have emerged from this pandemic, and I have to say that I don't think eBay is one. I think this is a name that benefited from us all just being home, say bored with more to do, more time on our hands to online shop. But actually, it's interesting you mentioned sort of these luxury and then lower end items because I often consider eBay to be very similar to Poshmark, which just reported earnings yesterday, and they're getting absolutely crushed today. They're down over 14%. So I have to say that concerns me a little bit heading into this report. But after being on their website and sort of looking at the front end of things, the website does feel old. It feels very dated. It feels like I'm on the internet 10 years ago. So I have to think that also matters to their happiness because they're not really evolving at the same pace of some of their other, giants, Amazon, Walmart, Target. I mean, Walmart has transformed their online marketplace where I don't really know why eBay has not, and they've sort of fallen behind. I mean, looking at the long-term chart, the price shows otherwise, but I have to imagine that hurts a consumer's happiness when you feel like you're on the internet in 1996.
Agreed. Yeah, you've got to update your technology. I mean, they have a ton of users. They got 20 million sellers, 180 or 90 million buyers. So they've got big numbers. They've got the audience. And I think that because of that early lead that they created, now it's time to sort of evolve and take that next step. Happiness on a platform of 63%. That's very low compared to those others that we talked about, 70 Amazon, Etsy 80, Shopify 85. 63 is just not getting it done. They've got to do a lot of work to get their users happier, get those shipping times down, update their website, and just make it more user-friendly. But it's tough because think about who they're going against, and there's just no room for them in the middle of just normal price goods. They've got to find high-end or low-end, and maybe it's high-end. I mean, I think the NFTs in May could be really interesting. I don't see that being huge volume again, but it's going to be big prices. So we're looking forward to the earnings event. We've got a score of -44 on this company. We're bearish. We're going to be making some trades to the bearish side, and long-term, again, I'd rather have eBay stock than cash, but there's hundreds of companies I'd rather have than eBay.
I think that's a good point. It seems like all the businesses they've been associated with that they spin off seem to do better once they break off that partnership with them. Look at PayPal. StubHub was another one that comes to mind. But Landon, I want to really focus on the opportunity cost as we wrap this, because I think there's a message to be taken away from that. We've talked a lot over the last year or so about best-in-breed companies. And while this company had an early lead, it's in a lot of marketplaces, and they're trying to find a niche. You could argue that they're third, fourth, fifth best, as Kevin put it, in all of these places. And in the world, as Jenny has talked about this week, where maybe you go to one place to save some time, be a little bit more efficient, are you going to go to the fourth best place? You talked about their user base. As far as I know, Facebook's user base is an order of magnitude bigger than that. So if they really start building out and focusing on their Facebook marketplace, seems like an obvious one, but that's a real threat. If you're trying to bring things to marketplace, Shopify's done really well. Etsy's done really well. eBay just isn't coming to mind, and unless you already were on there, I don't see how they're going to get new users unless they really find something that makes them stand out. Last thoughts here as we say goodbye.
I think you're absolutely right. And to echo your point on Facebook, if eBay's got 200 million users, my guess on the over-under is 95% of those are already on Facebook as well. So it doesn't take much of a technological leap on Facebook to completely just smash what eBay's doing. So I'm worried as an investor for this company. They have the potential to turn it around, but so far they haven't executed.
Good stuff. Landon Swan, the co-founder of LikeFolio.com. Jenny Horn, thank you both. Interesting conversation here, Kev, as we talk some eBay going into earnings. I mean,